GM, hope everyone's well. Bit better week this week. Welcome to the talk on DeFi investment. Let me do some quick introductions of the panel. I'm Gareth, I'm from Owl Ventures, full-time DGen.
Ashutosh from Exol's blockchain infrastructure for financial services.
I'm Mark Ziller. I work for the Aave initiative. We are the main Aave protocol DAO delegates.
Hi, my name is Kavita. I'm the founder of Delta Blockchain Fund, started Consensus Ventures and Tachyon.
Hi, my name is Ritesh Kakkar. I am co-founder for the XDC network, which is layer 1 EVM compatible decentralized network. Thank you.
Hello, my name is Akin. I'm the managing editor at DL News, the journalism arm of DeFi Llama.
So I think this week's been a fairly interesting week already, not just for the crypto world, but the wider VC world as well. There was a collapse of SVB Bank, then Signature Bank, USDC going off peg, which probably we all thought was impossible until this weekend. So I just thought I'd pose the question to the panel in these kind of uncertain times with attacks from regulators, et cetera. What do we see as the biggest challenges facing the DeFi industry in the coming years, and how are we going to overcome those?
I think from our point of view, we actually are very positive on DeFi, especially given we work with a lot of financial institutions who are adopting a lot of the DeFi technology to bring on board a lot of these assets and real world assets on chain. I think the only thing we see the difference is there are legitimate concerns for financial institutions to put these assets on public chains, as simple as transaction data privacy. So there are a lot more technologies now out there which are trying to change those things. And we believe that should be perfectly fine.
I think it's a very interesting time, right? As we were talking right before this. Sorry, is my audio too loud?
It's good.
So we are talking about an American unbanking system for blockchain or crypto. Even though if you have been KYC'd before, even though you have all the regulation compliance, which is also getting very stricken in UK and following the path, and how does the rest of the world follows is going to be very interesting. So as some of us were talking right before the panel, that we can go with the loopholes today as a VC fund or as a company to say, oh, this is a tech company and no more detail about it. But the crux of the matter doesn't go. You have worked at Aave. We have a bunch of token projects in our portfolio. At what point do we just accept it and go towards a simple banking while paying, and we still pay taxes on it. So it's not like we are not paying taxes on any of our income, whether that income is coming from crypto or from equity capital gains. But while paying the taxes, I cannot actually have banking basic services for it. So I think the question which I put out here is, what does the future looks like when it comes to especially DeFi? Because if we are thinking about DeFi farming, yields, a lot of different returns, and you can never take it back to fiat currency. What does that future looks like for you guys?
I think one of the main issue right now is that, you know, in the history of the US, you have this concept of no taxation without representation. As a DAO, am I represented right now in the US? What is my statute? What is my legal representation? And it's actually a huge problem. And I think the cycle we are getting in right now will be the cycle of maturity for the ecosystem, because we need to have ad hoc frameworks for what a DAO is, what are the responsibility and what are the rights of the DAO. Because I don't feel represented as a DAO delegate right now. I work for an entity that doesn't have any legal existence. It doesn't make sense. It's not about we don't want any rules. It's not about we should apply in one of the rules that exist right now. It's just that what we are doing is brand new, so we need brand new rules.
So I like to tell you very clearly, like, if you look at New York Stock Exchange, it started 150 years before, and SEC came in almost after 150 years. So here in DeFi, it's a very initial stage. So if you say that, we'll go to regulators, but regulators don't know how to regulate the DeFi space because everything is so new. It's not, many parties not written on their book itself. So looking at the current condition, I feel it's more like an evolvement. So regulators, they are against to those who are taking users' fund. They are not against to any kind of innovation. My personal experience, I meet many regulators. They are always open for the regulation. The only problem, they don't know how to regulate. So DeFi is a very interesting space, and everybody knows it's going to kill the traditional world because of a low fee and transparency. None of the banks gives you full transparency to end users. Like say you have money and you put on a bank account. You don't know where the bank is using your fund until there will be a collapse. So I think DeFi regulation will take some time, maybe a little bit. So we have to keep developing. We have to keep going to the regulators with our use case. And finally, we'll find out something like they are regulators. So they will regulate it like tomorrow or day after tomorrow. But things will come, like it will be stabilized gradually.
Okay, as the last person commenting on this, I want to offer some optimism. The first point I'll make is we're in Dubai, and I met lots of people who are just moving here, setting up companies here, or who've been here for years. There's so much emphasis on what the US does. It's like the Rammstein song, we're all living in America. We're constantly bombarded to American news. I work at the news organization, so I have to deal with that myself on a daily basis, even though I live in the UK myself. The world is not just America. There are other jurisdictions, and there's so much America can do before it rugs itself completely and the capital and talent flee to other jurisdictions. If you look at the UK HMRC's or the Treasury's consultation paper, you'll see that actually it has a very reasonable take. I highly recommend, if you're interested in DeFi, go read it. It talks about, for instance, the degrees of decentralization, like how much the core team own, how much of the DAO treasury is in its own tokens, or how much, whether the contract is upgradable, things like that we discuss in this industry. Policymakers are also aware. They had a good crowd of, I guess, experts who informed informed this paper. So that is good news if you hate decentralization theatrics in DeFi. There will be jurisdictions like UK that will be on your side. And quickly, I'll also say our industry has a history of innovating. If all fiat off-ramps, on-ramps close, I'm optimistic, maybe toxically optimistic, that there will be some sort of solution. Nigeria has had that solution, P2P markets. So we could see the same in the West.
Yeah, I think that's an interesting point and something we touched on as well before the panel started, in terms of if the US is closed for business, how do you see the future of the DeFi space shaping jurisdiction-wise? Who's going to take the lead there? Where are we going to see legal recognition of DAOs in the future? How are we going to interact with traditional financial institutions from the crypto side?
Can I underline just one quick thing? I think the regulations are only at the off-ramp and on-ramp, as Yula mentioned, right? The rest of the DeFi world, it's very, very far away, and even the understanding, forget about regulation. So the only piece of it which we are looking is you may be a billionaire in your DeFi yield, but how do you convert it to buy a house you want to buy for $3 million? So if US closes down that off-ramp solution, let's say 10 other countries closes down, there's always going to be 2 countries which is going to allow you, and then you go through the banking movement. So the money will find its place. It's just going to be interesting to see, does over time US as a country wants to lose those taxes completely. That's how I look at it.
It's also an interesting challenge for the US banking system, because the main stable coins, and that was part of the shit show we got this week with USDC, is US based and minting a US related currency. And the thing is that if you close down every banking partners of Circle, or do you redeem USDC for actual USD, and or you maintain the peg? And that's actually one of the main challenge of 2023, is that 3 of the 6 partners are done now. What happened for the three next ones? They are big ones and probably safe, but that's something that creates a bit of concern in the ecosystem at this point.
Yeah, I like to point out one more thing. If you look at on-ramp and off-ramp, that's not the only thing. But regionally, if you go to Japan, you can easily convert your crypto to Japanese yen. You go to Singapore, you can convert your crypto to Singapore dollar. It's all regulated by the regulators. So in future, I see there will be a regional regulations when it's related to on-ramp, off-ramp. And I'm very optimistic, and I think it's the future. Like every on-ramp, off-ramp will be very specific to the region. Like say if you are talking about UAE, it will be like crypto to say AED. Vara will come out with the regulations and bank will support today or tomorrow. So it will become a more like a regional specific in future.
And actually, some of the large global financial centers, right? Hong Kong actually came out with very clear guidelines earlier this year, and it's perfectly fine there. So they were kind of out of the game for a couple of years, and now they're back. So I think a lot of the regional financial centers, which are still home to some of the biggest banks, where you have open capital, something like Hong Kong would probably be the place where you start seeing movement of people out of US if such a regulation kind of becomes very stifling for the industry.
Yeah, so if you talk about Singapore, DBS Bank, they are the authorized people, they convert crypto to a Singapore dollar. So similarly, it's one of the biggest bank in the world. So as he mentioned, US is not the world, but there are different regions as well. They are also going to play a very important role in future.
When I get inside the ecosystem, the main trading volume for Bitcoin on an centralized exchange was actually a Chinese platform. So I entered the ecosystem in a weird era where we were pricing Bitcoin in Chinese yuan, in renminbi. Like it was like in everybody's minds, the price of Bitcoin, the unit of account of Bitcoin was the Chinese yuan. Do you think that this year we will start pricing the Bitcoin, Ethereum, not in dollars anymore, but in euros or other currencies?
You know, it's such a good question because actually there is an econometric report which came out yesterday, which talked about that one of the biggest reasons for USD to stay in power actually in last 2 years has been stable coins, because the amount of collateral between the top 7 stable coins are pretty much equivalent to the debt which China has been maintaining on treasury bonds. So if those stable coins are not going to be in USD peg, and let's say tomorrow they move to Euro pegging or other places whomsoever is much more comfortable with the jurisdiction, we're going to see a huge movement which is actually can shake the US economy completely. And going forward, I wouldn't be surprised if Dubai, Middle East, or Hong Kong want to be the leader and just start with their stable coins and let all the conversion happen.
And it can happen very fast. Like in the mind of people, nobody is that attached to the USD, so it can be AED in the future. That everybody will say, yeah, Bitcoin is 100 times on AED, and that's it. And it's gonna push in the ecosystem.
And then
quite
you can
fast.
just transfer it back to your Bank of America in the normal, simple fiat transaction, which actually can give you a more arbitrage opportunity.
Yeah.
I mean, it's been seen as a somewhat radical concept so far, but maybe with what we've seen with dollar-pegged stablecoins and potential regulations, do we see a move away, not to pegging to another currency, but a move altogether away from a peg towards something like RAI and being a decentralized, non-pegged currency that's just for DeFi natives?
The problem with DAI was that it also had 70% treasury in USDC, right? Because nobody thought USDC having all the collateral one-to-one mapped would ever depeg, right? But I think what we forgot is it's no more a question of having an audited pegging collateral. It's the question of now the government issued money too. So this wasn't a crypto failure. This was exactly a fiat currency, government issued currency failure.
I think I like to tell about DAI. I see is one of the great solution. The only problem, people using DAI for speculation, like they use for a trading, they use for a leverage product. So one of our ecosystem partner, Fathom, they are developing a like similar concept, but they are going to use entire money, like stable assets for the real world transaction. So they are going to fund to the invest, which like SME need financing. So they are going to use those currency for the real world usage. So I think the major problem is disconnection with the real world, whether it's a real world tokenization or it's a real world business or empowering to SME. So I think here DAI is missing something. Recently they took exposure into the T-bill, but that's not the solution. If you look at the long term, like you have to help your currency with the GDP, it should help to the SME, it should help to boost the economy. So I think we have many such projects, which I feel it's going to be a great thing for future. And Fathom team is already here.
I think it's going to be a mix of what the gentleman was saying, of this being very much regionalized, country-specific, and probably the community itself deciding that, okay, we are not going to do anything with the fiat at all, right? Totally. I mean, for example, if I have $1 million in USDT, right? I really do not, and if the community actually comes together, we really do not need a fiat element attached to it. Is it okay?
Yeah,
Right, I think there would be, I really hope for that. There's going to be a time where we have nothing to do with the fiat currency altogether. We don't need to worry about the depegging, right? And I think that's the ideal scenario which I see as an investor in this space, right?
I think as an investor in space, we have all established on-ramp, off-ramp is a problem. Gareth, I'm sorry, I'm taking over your question, but very quickly, and you have been a DGen in the space, so I'll include you in the conversation. How are you guys dealing with all the hacks of this week?
Yeah, I think that's a good question. I mean, I personally saw a lot of friends within the DGen Score Citadel, which are supposedly the top on-chain DGens, DeFi natives, and so many people were caught offside in Euler Finance, like they didn't see it coming. It had been audited 12 times. How do we, as investors, what do we see as the protections that project companies should be putting in place to protect against these kind of hacks and exploits? How can we better protect investors in the space?
I think there's definitely a safety culture in DeFi, at least the main protocol. And I just want to say that it's very unfortunate what happened to Euler. They were obviously our competitors with Aave, but we like to fight. Competition is good for the ecosystem, it brings innovation, and we want to win because we are the best one, not because the competitor got a very unfortunate event. And what happened to them could happen to everybody. Like, they were as much in the safety culture that we are. They were doing like many audits, and they are very great engineers. What happened to them is unfortunate, but that's life. And obviously it's brand new tech, and we do everything that is humanly possible to protect our user. And for Aave, that means that nobody lose money for the past 3 years, but there's still gonna be risk on chain. There's no way you can say it's zero risk. So it's something you have to accept with brand new technology.
I have something to say. Like, if you look at the traditional financing system, it took 250 years to reach here. So if you are talking about DeFi, you know how the consumers, they are protected. If you look at any platform, DeFi platform, they don't want to lose users' money. They want to do lots of experiment, which is already done in traditional world. Now they want to do on-chain. They just want to remove all the intermediaries. They want to remove all the fees. So one system took 250 years to reach here. It will take another 5 years, give us 5 years to the DeFi systems to evolve and reach to level where everything is very secure, smart contract is very much evolved, and people have full faith they can also invest few $1 billion in a DeFi ecosystem. Right now it's a very much on an innovative stage, so it's very early to say it's totally secure. It's a totally innovation, and we have to wait for the evolvement of a technology.
I think the only solution is more and more education and awareness. I think that is the only solution which I see for hacks right now. I mean, even in the contemporary finance, there are hacks which happen even today, right? So probably if the community of developers can come together, especially security experts can come together and and put together probably a standards where every DeFi platform goes through and it can be really, really stable and secure. And that's one solution which I see as a developer also.
In my personal opinion, I think DeFi is cannot be that simplified, right? First of all, I do not agree that everything which has been done on the trading floor traditional space is the only thing which is happening in DeFi. I think there is a way many more innovative products which are way more complicated than what exotic options, swaps, etc. are doing. The second thing is, I think the point of failures or the point of vulnerability actually is the better word than the failure, are too many right now on DeFi. You have all the Web2 security issues, and then you have different issues from your individual wallet hack to the company multisegs, to then on the platforms, phishing activities coming from just the website, to then your smart contracts auditing issues. Now, if we just stick to the smart contract auditing issue, unfortunately, what happened with Euler, where you have one of a very, very reputable product, has gone through all the smart contract auditings for 5, 6 different level, and a one simple feature which is not even being used is just a part of a new feature caused the 200 million plus hack. Is there a type of a standard, and this is something as a VC we have been thinking about for our portfolio companies, that what do you establish a standard that you cannot go and actually launch something without having these type of certificates or some sort of a standardized report, which if you don't have it, no user can use it.
Yeah, Kavita, I like to add to one more point. If you are talking about DeFi, like you are hosting on certain network, and the network, they only have 20 nodes run by like few people, 2 or 3 people. So go one step ahead as well. You know, from a like platform side as well, there might be lots of vulnerability when the platform is not very decentralized. Like many top 5 chain or top 10 chain, if you look at, they have only 20, 25 nodes. So it's so easy to manipulate not only this DeFi smart contract, but you can like, you know, do lots of manipulation within like blockchain itself.
In terms of standards, obviously I will chill Harvey a bit because obviously, but more and more there's people in the ecosystem that say, instead of just starting from scratch, we're just going to white label Aave. And that's basically what happened with Centrifuge, with real world asset as collateral, what happened with Realty, with real estate tokenization. It's the Aave code base. So it's the same smart contract that had been audited half a dozen times, that are live for the past 3 years. And they just take the code, deploy that with their own kind of collateral. So there's always risk, obviously. But they just say to the DAO, we're going to give you 10% of the profit or 20% of the profit. It's an on-chain agreement. And I think it's part of the solution that instead of reinventing the wheel with every protocol, we can do like MakerDAO is launching Sparkland as well. That's going to retake the Aave v3 code base and do their own product. I think there's a way to standardization to just relaunch the same code base, because what we do is like already battle tested, and just have a deal with the DAO, and you still have your own product that is interesting, your own value add, but you come from a technology that is already proven.
But Mark, that's not feasible for early projects, right? We are talking about...
Well, what we do, like liquidity protocols, yes.
Yeah, but then that you are dependent upon a big tree to start a small plant. If people are going to come up with something more innovative where they are using, most of the DeFi products, by the way, are using big chains like Polygon or Ethereum or Avalanche, like really big ones which are responsible for their 1,000 of nodes. But I still feel like a particular standard, whether it comes from Aave, it comes from MakerDAO, Uniswap, or all of them come together and have some sort of a security standard, is one of the biggest missing piece, right? Because everybody has come down on most of the projects which we have been looking at is like wallets who are just trying to get all of them together and actually create more security issues by having so much of aggregated at one place without solving the security issue. And most of the smart contract auditing firms which we have worked with or invested, Quantstamp, Halbon, Hexen, they all work on individual security audits. Even to get a firm which does Web 2, Web 3 security at the same time and take responsibility for both is so hard to find. So as the DeFi product builders, there hasn't been a movement or the focus which we have seen.
I guess there are many Bitcoin maximalists in this room or at this conference. but I think we got a lot to learn from BTC Maxis, not because they've been around for so long, but they had to, build this culture from scratch. I think it was Andreas Antonopoulos in 2017 who said something like, Bitcoin is a sewer rat. It exists in this adversarial environment where everything is trying to kill it. I think DeFi is a little bit like that too. It's a swarm of sewer rats. We're surrounded by, we exist in an adversarial environment, internally or externally. Internally, it is, it's like an open market for bug bounties, or it's like a money glitch, so you just have to hit it right. Today I saw GPT-4 was released, and now it's able to perform code audits on live Ethereum contracts, and it also tells you exactly where the exploit might be and how you can exploit it. It literally walks you through. I think these capabilities will only get better over time. But I'll also offer a dose of optimism or a bit of hopium. Basic DeFi primitive or lending protocol can be shaped in so many ways. Like Compound won't have the drip function exploit again. Euler won't have the reserve, donate reserves or whatever that line of code was. They won't have it again. They were already 6 times audited. Unless we innovate new products, and that will happen, of course, and then more degen types can go ape into them. But if you stick with, I think, with protocols that have been around for a long time, I think the risks are much, much lower that something will happen to them. I mean, if they are upgradable, of course, and we solve that with MakerDAO Oasis. If they're upgradable, and there are still a lot of upgradable contracts, then the risks still, persist. But if they are immutable, like Curve is immutable, Uniswap is immutable, and they've been battle tested. I mean, if there's a Curve exploit tomorrow, don't blame me, but I think it's just reasonable to assume that the risks are not evenly distributed in the industry. And over time, these things will have to get better. I think it's even better than TradFi, where they have to make these decisions in closed doors, whereas in DeFi, everything is open. Andre Cronje is at the conference as well. He called DeFi, he was saying that we should call DeFi OpenFi, open source finance instead of decentralized finance. I think that points to the right direction and gives us a reason for optimism.
So I think
I like to add one last point. If you look at Uniswap, is a classic example of a DeFi, where everything is decentralized, it's open source, people knows who is contributing. You can put your own liquidity. You can see all the transparency. You can see everything very transparently, what's going on. And it's replaced, yesterday I was reading, Uniswap already crossed the volume of almost like a Coinbase. So the system is already evolving, and it's we can see the progress as well. So today it's a Uniswap, tomorrow might be Fathom, or day after tomorrow might be some other DeFi network will come, and it's going to lead the world in future.
okay.
Love the plugins here, by the way.
Sorry?
I think unfortunately on that bit more optimistic note at the end there, we've probably run out of time.
We are
for today.
optimistic, but Kavita is not optimistic. She's worried about her money.
I'm very, very optimistic about DeFi, but I am not afraid of asking the tough questions. And I think those things have to be
Smart people ask dumb questions.
very happy to be dumb. But I think the main point is what we have seen in the crypto industry, being here since 2013 and have seen 3 cycles in the space and pretty much the whole ecosystem being built. In the bullish cycle, we only focus on what's working when it comes to yields and money. Bearish cycle is when we actually sit down and talk about the infrastructure to make sure they survive and they thrive. And I don't know whether we are in bearish market already or not. I mean, looking at Bitcoin prices today. But the question out here, which I am more concerned and I think will be a great opportunity for DeFi to become what the potential is if we don't work on the infrastructure of security, we don't work on the infrastructure of adoption without the regulation risk, And the third and the most important part is actually have the right compliance for the yields to be realized as a capital gain, irrespective of where you are in the world. Then DeFi, we always have something which will push DeFi down. And I think I'm bullish in the sector, given that every individual company and VC come together to actually make sure there are standards for these three.
Absolutely, and I think we should also take some inspiration from Web2 or probably the US SEC, when they built the Howey's test, for for the stables, right, and utility tokens. Probably we should take some inspiration from that, right, and set up a standard to ensure that the infrastructure, the security infrastructure around DeFi, is more secure. And I think because it's more important because there's so much of TVL, actually logged out there. And the only people who can do this is the community of developers out there, right? We can just, probably the advocacy which we are doing today is only going to happen if the developers actually come together, irrespective of what chains they build on, irrespective of what chains they focus on, what's their favorite. If they come together and build probably a standard which can also give you a security score, maybe that's the most elemental one, and probably if there is if there's an AI thing which can get built and suggest that okay, this is what your platform should do more to ensure that security is better and people's money is safe. The end note is that we can take inspiration from Web2 there.
Mark, as a developer, DeFi builder, and DAO guy, last words.
I don't know, it was like a very good speech. Yeah, regardless of every chain, any chain, as long as it's EVM, obviously, because I'm a maximalist. But outside of that, basically the whole shit show of the past 12 months is a huge TradFi and CeFi advertisement that DeFi works. And I think we should continue to focus because obviously we are still immature. There's still a lot of things to build. It's also a hackathon, this conference. So let's start building the future of France.
I'm going to do some marketing and I'm going to invite people to come and build on Fire for that. Thank you.
Thanks a lot, everyone.
Thank you.
Thank you so much.